So looking at the S&P 500 here, you can see that, we've been kind of in a broad channel over the last few months, and recently you got down towards 2000 and was testing that 2000 mark psychologically so far at the beginning of this year. And you've had two tests of it, and at the start of the year you dipped below it, bounced back up to test 2060, and then in the middle part of January, just last week, well, the week before last rather, you touched 2000 again before recovering back up towards 2060. And this was something we talked about last week a lot, and that is this top channel line right here. This top channel line is at the 2014 close of 2058. And just to refresh your memory, or if you weren't here last week, to show you, what we looked at is the S&P 500 during the early part of 2014 relative to its 2013 close. Its 2013 close was 1848, and you were up near 1850 testing it. But that 2013 close at the beginning of 2014 acted as resistance, and you kind of traded in about a 40-point channel, 40 to 50-point channel between 2050, which was the 2013 break-even line, and kind of 1820, which provided some support. Similar setup at the beginning of 2014, dipped right away, bounced up towards the break-even line, dipped in the middle of the month, just like we did this month, bounced back up towards the break-even line, but then break-even line acted as resistance, you rolled back over again. Well, right here, I pointed out, again, not pre-market, right now you can see futures here, ES, at 2030. They closed Friday at 2043, and they hit a high on Friday of 2063. So we've dropped 30 points on the futures here off of that high, and that high you could guess is right up near that 2014 close of 2058. You touched 2058 on Thursday, Friday, backed off of it in the afternoon on Friday, and now here we're seeing some continuation off of it right now with the futures market opening, and we'll see if that holds up. Point being, looks like we're backing off of the break-even channel, and we could be going back down towards 2000, but it's tough to really make a directional call on this market until one of two things happen. Number one, just like in early part of 2014, eventually you had to start getting stability above the 2013 break-even, and hopefully this isn't the case, but last year it took about 3 to 4 months before you finally started getting extension above that 2013 close of 1850. But then once it finally did happen, April into May into July, you just saw an awesome move going from 1850 on up towards 2000 in the S&P. So that would be number one. That would be the bullish scenario, of course. The bearish scenario is you need to break below the lows that we just bounced off of. Okay? The December lows and now our January lows. You've got the December low at 1972, and you've got the January low at 1988, just about. So, bottom line, can't make any bold predictions here until the market either gets a breakout to the upside above the 2014 close or a breakdown to the downside below this December and January low. If it's a breakout, we're looking towards 2150 to 2200. If it's a breakdown, then the logical approach would be towards the October low in the 1860 to 1840 region. So that's the setup on the S&P 500. And just be mindful of that, because the S&P did dictate a lot of the action over the last 2 weeks in some of the more widely traded names, such as Google. You can see, looking on this daily chart, Google bounced hard off of its December low, then came back down and made a January low down near 500, and now with this bounce in the market off 2000 to 2050, Google's seen a very nice bounce from 500 to 540. So, it's kind of the same thing with Google that it is with the market. You need to either get above this 550 level, really get stability above the 2013 close, or you need to get a solid breakdown below 500. Otherwise, expect Google to remain in this channel. One thing to be mindful of, though, that hopefully serves as a catalyst for getting out of this channel on Google one way or the other, is earnings are this Thursday after the close. So Friday will be the reaction day. I want to see on Google, can it hold this newly formed trend line that it has established off of its January low at 497. This trend line coming into the week is down around 517, but by earnings on Friday, the trend line comes up to about 528. So I think as long as you can kind of stay above 525-ish on Google, then you look for that to be a higher high, H squared, if you will, and expect Google to set up for a breakout, but again, needs to get above this 550 mark. That capped it in late December, that capped it in late November, okay, and just overall 550 used to be support back in June, so it looks like it's turned into some resistance. Need to get above that 550 on Google to get a breakout and start going towards 600s. To me, though, with the market gapping down, if this gap down holds, I'd expect Google to come down a little bit, maybe backtest the 530 to 525 range. Earnings from Google Thursday after hours. Another one with earnings this week, Thursday after hours, is Amazon. And I just want to show this trend line that I have on Amazon, because this dates back to its all-time high way back here. Alright, so this was back in January 2014, so Amazon peaked right at the beginning of last year, up near a psychological level of $400, and this trend line capped the stock in July, capped the stock in September, capped the stock in November, and now you're testing it again here ahead of these earnings. I really like Amazon because it needs to do something. All right, I feel like you're going to get a move here, and while I don't know which one, I know what I'm looking for. $300 on the support side. Recently, every time you've come below 300, the move has gotten better and better to the downside. I'll talk about what I mean for a couple moments here. So you got below 300 for the first time back in May of last year, right? And the move below 300, it was a very choppy move, okay? A lot of whiplash, a couple days down beneath 300, then a bounce, a lot of recovery, then back down, then you ultimately had bottomed out. Then the next trip below 300 was in October, and that one, same thing, gap down, recovery, then you came back down, then a recovery. So both those times you didn't stay below 300 very cleanly. However, recently you got below 300 two times, once in December, and you spent some days below 300. You had a really nice down day where you went from 305 down to 295, and then another day where you went from 304 down to 293. All right, and then the most recent time at the beginning of this year, you spent like 2 to 3 weeks below 300, and had a little downtrend here going, beneath 300 that you were able to get above. Point being, though, I think if Amazon comes below 300 again, it should be the one that kind of breaks the camel's back and results in a nice crack to the downside, towards 280s, 270s or so. That's the downside. But if you're able to hold 300, as you can see, this trend line is coming lower and lower and lower. By the end of this week, it's going to be down around 309. Going into next month, it's going to be coming down towards 300. So sooner or later, Amazon's going to have to break out above this trend line if it keeps defending 300. And once you do that, then you're setting up for a higher high versus that late December high around 315. And then your next area of resistance isn't until the 340 to 350 range, which gives a nice window on Amazon to the upside. So, I don't know what's going to happen on Amazon, but I do feel good that there is a pretty big window on either side. We're looking at a weekly chart now, so you can kind of see down around 280. You can see those lines. If you break that support, you'd be breaking 1 year support, and that would really open things up to me to the downside. And then if you can break above this resistance, you're talking about 2-month resistance, that then opens things up to the upside. You can see again this downtrend on the weekly chart off of the highs. So bottom line, earnings this Thursday after hours. I think in reaction it would be nice, I shouldn't say I think, but it would be nice if Amazon can either give us a move above 315 to 320 or give us a move below 300, because if that happens, I think you see some really good volatility one way or the other, either big move to the upside or big move to the downside. I want to look at a couple lower price names at the moment here. First one is FXCM. You might have seen this one. Those of you who trade sub 10 stocks, you better have seen this one because it was the story of the week. The Swiss took the peg off of the euro or whatever they did. I'm not too familiar with it, but I know that the Swiss franc went up huge, and this stock, which I guess is a broker, a lot of their clients lost money and they had to nearly file for bankruptcy, and they got a rescue loan. Bottom line, you can tell that a bunch of shit was going on because you went from $16 down to $2 on just massive volume. Look at this, over 100 million shares, multiple days. Before this happened, you barely traded more than 200, 300,000 shares a day. The average daily volume on FXCM before this all happened was only 325,000 shares. Now you're trading millions and millions, literally 100 million shares on Friday. So, that speaks for itself. Just insane increase. I want to break this down into a 15-minute chart to kind of get a closer look at FXCM now and just talk about this new price range that it's in between $2 and $5. So you can see here's the big gap down. You went from 12 to 6, then you kind of based out around $2 and around 150. Okay, and then you based above $2 and you got a nice move up towards $3. However, thing got sold into, it's come all the way back down and is now back testing $2 after Friday. To me, my reaction is kind of like, all right, you had a huge move to the downside. You had a huge move to the downside and you bounced, but now you're right back holding on to pretty much all of that move to the downside. You were not able to hold on to any of the bounce. You dropped 80%, bounced 20%. Now you're back down 80% from where you were just 2 weeks ago. I think that's a bearish sign overall, and I think you could actually lean in on the short side still on FXCM versus the opening range from Friday around 250. I would watch over under 250 on FXCM, over under 250. That's your midway point between 0 and 5. So above 250, you can set up to bounce back up towards 5 with resistance at 3 and then 350. Below 250, you can set up to go towards 0, quite frankly, with the headline surrounding this stock. And your first level of support that you'd look to is 150, which was the area of a base from the start of the gap down. And then below that, 115 is your low that you came off of overall. So FXCM, very active stock, great stock for flips, for scalps. You can see just a ton of volume. If you're a day trader and you trade stocks under $5, you've been trading FXCM for the last few days because the volume's just awesome. And that's usually the number one thing day traders want to look for, is high volume. You can get in and out very easily. Another lower price stock that's getting killed recently, we'll look at a daily chart first, and then again a 15-minute chart, is OCN. OCN, I don't know the story with this. I know it's a financial name, but you can see the chart really tells you all you need to know. Stock has gone from 35 back over the summer to then down at 25, and then to 20, and then to 15, and then to 10, and now it's just about at 5. So this thing's been going all the way to the downside for a while, and like FXCM, the volume has picked up as the price has fallen more rapidly. So very active stock, and the obvious thing to say is that the short side is working, and so keep looking at that. Again, going to break it down into a minute basis. I'll look at a 15-minute first and then a 5-minute chart. But the 15-minute here, you can see it looks like you actually bounced here after hours looking at this thing. So this is interesting because Friday after hours, maybe they got news, but you had a rally in the stock. So it closed Friday at 6:30. After hours, it was up to $8. So it'll be right around $8. It's going to be gapping up tomorrow, assuming that this after hours move holds. And I would just kind of watch Friday's high. Friday's high was 750. Go back to the daily for just a second. You'll notice that it hasn't been able to get above its previous day's high the last couple of days, 4 or 5 days in a row. So you're going to be above Friday's high if you hold Friday's after hours move. You want to stay above 750. Over under 750 setup. 750 midway point between 5 and 10, just like 250 on FXCM, midway between 0 and 5. So again, going back to the minute chart, and let's look at a 5-minute this time. You can see the after hours move. That is this move here. Nice little flag here. All right. So over under 750, you can bounce up towards 10. But again, the longer view on this thing says every bounce has been a short overall. So if we look at this 5-minute chart, you've seen a couple bounces. We're looking right now at the 20th, so that was Tuesday. You can see you got down to 750, bounced up towards $8 for a bounce, but then you came right back down to 750. Then the next day on Wednesday, bounced from 750, got all the way up to 830, but it was a short trade, came back down. So shorting pops have worked. They've been the easier trade than trying to time the bottoms. And you can see again, maybe we hold 750 so we get a better bounce, but overall, if you do bounce up towards 10, I would look at OCN as a net short trade. I don't see much of a bounce on Friday. I see you bounce from 566 up to 630, but I don't know. I mean, that's not much considering the move down was from 750 to 560. The move down was much better than the bounce. So again, to me, I'd keep looking at shorts, even though you might get a little bounce here off 750, but overall trend is to the downside here on OCN. Got to get back above $10. Which bounce are you talking about, bro? This bounce here from 566 to 625? I don't see much of a Friday bounce. Okay, well, hey, we all see things differently. Not saying it didn't bounce, but what I like better is 677 to 566. You dropped $1 on the short side, and then you only recovered about 75 cents. But anyways, this is a nice bounce after hours, 550 from 844. That's what people want to see. So we'll see if that continues above 750 towards 10. But anyways, all right, looking at LUV, airline stock here, very liquid, and just, you know, one of the stories has been the airlines and how they've been performing, not just recently. It's getting a lot of attention lately because of what's been happening in oil. Oil's going down. Oil's been going down, and you know, the airlines, people say that's a good spot to be looking at. But I want to pull up a weekly chart and just show a couple different airline stocks to point out that this move in the airlines didn't just start. I mean, you closed 2013 at 19 bucks on LUV. Now you're at 45. 2014 you went from 20 to 35. I mean, it's been a great trend for the airlines for some time. You look at United Airlines, UAL. This one, you went into 2014 at 35 bucks. You got up to 60 last year. Now you're at 73, breaking out big time. You look at Delta, DAL, and same thing. You know, you've gone from 15 to 30. Now you're at 50. And some lower priced ones to keep an eye on. JetBlue, JBLU. This one was $5 at one point a couple years ago. Then you got up to 10 in 2014. Now you're up at 16 bucks. Bottom line, airlines are in a really, really strong long-term trend. And in the short term, they just broke out yet again. They all just got above their December highs, which the market has yet to do. So the airline's really leading here. And you look at LUV, look at these winning streaks. This stock just rallied 6 days in a row. Prior to that, it had a stretch in December where it rallied 4 days in a row. Then another 3-day winning streak, 3-day winning streak, 4-day winning streak, just multiple winning streaks on LUV. And again, on all of these, you look at Delta, you look at United, you look at JetBlue, they're all rallying strongly. Oh, sorry, we're looking at JetBlue right now. My bad. Meant to be looking at Southwest. Southwest rallied 5 days in a row. These winning streaks are crazy. But so keep playing these on the long side. Ton of momentum here. Volume's increasing. Awesome, awesome trends in the airlines. I like Southwest on dips. And again, going back to JetBlue, it's the cheapest one of the cheaper ones. So that's why I like it here. Up to 16, again, breaking above that December high. You just want to see the same thing. You want to see the airlines breaking above their December highs, and you can see pretty uniformly all of them are doing that. AAL is another one, American Airlines, out of their bankruptcy restructuring, 30 bucks in October, now damn near 60 bucks. So great trends higher in the airline names. I want to look at QQQ because something's going on in the Q that isn't going on in the S&P, which could be a good sign here for the tech space. So talked about that 2014 close and the 2013 close on the S&P and kind of how that dictated the action and how it might be dictating the action here and now in the current market. Well, QQQ is in the green. You closed 2014 on the Q at 103.10. You're up here at 104, so you're up 1%. You were able to get above this high from a couple of weeks ago. If I pull up the S&P again, you'll see that the S&P did not get above its mid-January high. That is a key difference here between those two. And I think it could be a sign that technology is going to take a leading role. if the market does indeed continue to advance overall. We're seeing some leadership by QQQ in the form of being able to get into the green while the other indices can't. Remember, QQQ essentially represents the NASDAQ. So that's just something to keep an eye on here overall. It still has the same thing on the support side. In order to really start going down, you need to get below $100, which was the December low and the January low. But as long as you're above 100, QQQ, I like overall to just stay in this channel. But if you start staying above the 2014 close, could be a sign of a leadership breakout by tech. Lastly on my list to go over is Netflix. Netflix reported earnings last week. Really big move. Got above $400, held it off of a gap down. I'm going to go to an intraday chart so you can see how the gap, sorry, I said off of a gap down, held it off of a move down from a gap up. And if we go to the 15-minute, you can see what I'm talking about. So here's the after hours move on Tuesday, going from 350s up to 400s, and then the gap up. And here is the opening on Wednesday. You opened around 415, and then off of that open you filled the gap down to 401s. Your low, I believe, was like 401.87. Yeah, 401.87 was your low. So you essentially tested 400 off the gap fill. You were able to hold it, close around 410. Next day, open flat, came down to 405, put in a higher low though, and then got above 410, went green, and that just set off all types of momentum on Netflix. You can see the awesome move here from 410 to 425, then a little pause at 425, then a 430 action, then a 430 breakout, then you close just underneath 440 on Friday. So first thing I want to say about Netflix is it's got the momentum right now. Second thing I want to say is it is overbought. It's overbought, but things that get overbought can remain that way for a long period of time. So it doesn't necessarily mean anything, just something to be aware of, because if you do roll over, you can have a pullback here while still being in a bullish trend. Intermediate term, before I talk about the short term, this 400 level is pretty significant. As long as you stay above 400, nothing bad is going to really happen in Netflix. Once and if you were to break below 400, that's when you could start getting into this potential gap area and going back down towards 350. But as long as you're above 400, Netflix is going to look pretty good to get back towards the all-time highs up near 475. So that's intermediate term support. Right here, right now, you can see you are testing the gap down area from October. When you gap down, you had closed that October gap down at 448, and you open the next day at 331, again off earnings. You're almost at a complete gap fill back at that 448 range. So could be an area of resistance. However, if Netflix is able to stay up here around 440 or consolidate, in the high 430s, she's going to look pretty good to get a breakout and go towards 460 to 480. So, I know Netflix is overbought up here. I know it's testing this resistance area from the October gap down, but this move you just made, that's a big, powerful move. A lot of money behind it, and I don't doubt that she wants to get back up towards all-time highs. Otherwise, why would she have wasted her time going up, 30% on the week? So, while Netflix maybe needs to chill out for a little bit, got to be keeping your eye on this name, as she did get juice back into it after kind of being lifeless for the last few months as it kind of consolidated in the 350-ish, 360s on down towards 320. All right, guys, any questions on anything? Got a request on ARRY. This is a bio name. So really big move on Friday, up 40%, huge volume. So I like this breakout. Awesome move above $5. With these low price names, we always talk about that $5 level psychologically. It's almost like a $100 level on a higher price stock. You got above $5 and you just ripped higher. Basically a gap and go. Let's break this down to a 3-minute chart and see what the intraday action looked like. Okay, so ARRY, you just gapped up and just had a huge move at the open, going from 540 to 740, and then just consolidated all day in a about 30-cent channel, 30 to 25-cent channel. So my takeaway when I see that is ARRY, maybe you only want to be playing this thing the first 30 minutes of the day. Let's go back, look a little bit more. Well, see, she's not that liquid. She picks her days that she wants to be liquid, but you can see even on January 16th when you went from 420 up to 450 for a good move, that was basically all within the first 30 to 45 minutes of the day. So that's my first takeaway on ARRY, is she looks like she makes her moves within the first 30 minutes of the day. My second takeaway is after she had a big move up in December on a gap up, she had one more continuation day to the upside, going from 450 to 5, and then a long consolidation. So maybe look for the same thing. Maybe look for another continuation day here tomorrow, and then a long consolidation overall. But the trend is going in the right direction, and this thing looks good. And if it has liquidity like it did on Friday, put it on your radar. Looking at TNK, you're in at 250. You want to know if I think you should buy more long term? You know, if I was in this stock, personally, I don't average up that much. You know, I don't average up at 100% gains. But hey, this thing's in a really nice uptrend, at least in the short term. Let's look at the weekly. Okay, so weekly's a little bit, tells a bit different picture. Let's look at the monthly. Okay, so this is a name that used to be expensive, well, not expensive, but used to be in the 20s. Now you've kind of rounded out, and I like this volume that's come in the last 2 months, kind of coming back to life here. You are coming up on some key resistance from 2012 and 2011 in this $6 to $7 range. What I like about TNK is what we just talked about relative to $5. You just got above $5 recently. If we look at this daily chart, you can see the volatility it experienced around $5, and this is common for, you know, psychological levels. Got above 5, made a big move through 5. Then you came back below 5, but you were able to regain it. That's what I love. That gap down in December that took you below 5, it took you right back up above 5, and then again, a big move. So a nice reaction 2 times getting above $5, where now as long as you stay above 5, and even better would be holding this 550 level from last week, you're going to be moving to the upside. So I like TNK to trend higher long term now as long as you're above 5. Back below $5 and this thing could roll over in a hurry and go down towards 350, which was the October low, as she is still arguably in a long-term downtrend. But stay above 5, eventually take out this January high up near 7, and you look good to go towards $10 longer term. HUM, good ticker. Good tickers usually. Okay, Humana. Yeah, I've been seeing Humana in a longer term list that I receive every month from my ARA account stuff. So yeah, this is pretty simple. Nice long-term uptrend, and looks like you can continue to go higher. You've got a couple trends overall, depending on which one you want to pay attention to. But I like this name long term just based on what it's done here. Oh yeah, you've come a long way. Let's look at the daily again. So you are right up near 150. You're testing the December high. 150 psychologically, can you stay above it or not? As long as you stay above it, then look for the immediate term trend to remain to the upside. As far as figuring out long-term buying opportunities, it's the same thing as it is on the market. As long as you stay above this late December, early January low around 140, then that is probably your best buying opportunity, is anything above 140. If you were to break 140 though, that could open things up down towards 130 to 120 for a lower prices, but Humana looks good. Any others? Alright guys, doesn't seem to be any more questions, so I will see everybody tomorrow morning, and let's have a good week. Thanks.